is Beat the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Ibem Nabunda. Let's get started. Now, coming up, OK Zimbabwe has unveiled plans to sell some properties to raise part of the required $30 million to stabilize its operations. Last month, OK revealed that discussions were underway for a $30 million capital raise to clear its debt with suppliers. In a circular to shareholders recently, OK said that it would raise $20 million from existing shareholders and the planned sale of properties to raise the balance of the required capital raise. TSO Limited, a diversified holding company with interests in tobacco auctioning, printing and packaging, agricultural inputs, storage and distribution and services, has posted a 43% increase in profit after tax from continuing operations to $4.3 million, of course, on the back of movements that have been taking place in the country's agricultural sector, and that, of course, relating to the 6 months period ending the 30th of April 2025. This was driven by strong volume growth as well as cost containment. Of course, we take a look at these two companies in detail here on Beat the Market. Beat the Market to Brad back. Don't go anywhere. You're watching Beat the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Ibem Mambunda. Now we take a look at our stories in detail. OK Zimbabwe Limited has unveiled plans to sell some properties to raise part of the required $30 million to stabilize its operations. Last month, OK revealed that discussions were underway for a $30 million capital raise to clear its debt with suppliers. I'm now joined by financial analyst Kodakwashe Taimo, as well as Morgan and co-head of research Tafara Mututu. Gentlemen, hello and welcome to Beat the Market.
How you been? Thank you for having us.
Fantastic. Congratulations, Tafara, on attaining your CFA charter.
Thank you.
Fantastic. Now, to get the ball rolling, OK is, of course, undertaking that capital raise. What's your assessment? I'll start with you, Tafara.
I think this was a long time coming. We hoped that it wouldn't come to this, but here we are, and it seems it's the only way out for this business, considering the weight of their payables that they have on their book. And I think if they can raise that, it will surely help them map a way forward, because as it is right now, the current state is creeping into solvency issues for OK Zimbabwe.
Right, we want to weigh in, Kula, your sentiment on what has taken place as well as the response taken on by OK.
Yeah, perhaps what's notable, just to add on what Tafara said, is just taking a look at how both of the circulars differed. It released a circular on the 25th of June, which they specified that they intend to raise 20 million through a rights offer and 10.5 million through asset disposal. But initially, the circular, which was published on the 2nd of April 2025, it had highlighted that they intend to raise the 30 million through rights offer, private placement and debt financing. So just taking into account that there has been a change in the capital structure, that alone signifies a lot. Perhaps, of course, we do have our own opinions on how it changed. For instance, just taking into account that they've realized that looking for capital elsewhere outside us, perhaps without them exhausting the internal funds that they have, and without them perhaps convincing the shareholders to raise them sufficient funds for them to be able to resuscitate or actually to revive the sinking ship, could prove otherwise. But, well, like Tafara has said, well, I can say it's a good thing that they are saving the sinking ship, but all of us are looking forward to how they will be able to move from survival to recovery.
Is that figure, $30 million, attainable, given what we've seen play out with OK, what we've seen play out where other forms of capital raising, be it on the Zimbabwe Stock Exchange or on the Victoria Falls Stock Exchange, as well as what we've also seen playing out in the macroeconomic environment for Zimbabwe from a liquidity perspective? Tafara.
Yes, so in the Zim market right now, liquidity is very tight. It's very hard to raise capital in the current environment. But I think where OK could get a win is, when you look at their shareholders, NASA is one of them. And NASA tends to have a lot of cash on their books, which they usually put into other investments. And in this case, I think they could have some that could be sufficient enough to give them some sort of, funding that's enough to ease the current management that's there now, as well as other shareholders. So I think there's a good chance that they could raise that money because some of the key shareholders actually they have a boatload of cash.
Right, some deep pockets, you seem to assume. Now, the question then would be, will the rights issue and the property sales sufficiently plug the hole, or is more funded likely to be needed down the line, Kuda?
Well, yeah, I would say it does move the needle, although it will not be able to completely pay all of the obligations that the group have. If you had to look into the recent circular that they made, they actually indicated to that they will be able to repay some of the outstanding amounts of the suppliers. But the group intends to further repay the other obligations in the following 6 months, right? So that's where my major concern is, because they intend to repay this using internally generated funds. So my first question is, if you are to look at it, the rights offer, it's predominantly in USD. Yet there was an option, perhaps for the shareholders to subscribe even in the local currency, in ZiG. I would clearly, possibly anticipate that what the officials are projecting, that the ZiG has been relatively stable, and that even the sentiment of the suppliers has improved in them possibly wanting to receive the payments in ZiG. But them subscribing that predominantly the rights offer should be in USD, that's a message right there. So perhaps I'm trying to think in my mind, how are the retailers, or even OK Zimbabwe, is it going to generate the sales which are predominantly in USD? Because failure to do that is either they're going to have long lead time, or perhaps the suppliers, partially, they might be motivated to do business with OK, but if OK fails to generate the sales in USD, they are likely to lose the suppliers to the
Tafara, how do you assess the decision to pay off creditors first? Question then would be, will that unlock significant supply confidence and support going forward?
So unlike other retailers in the market, they really have to take an extra step further to, one, bring back suppliers that they lost, and two, to attract new suppliers. And as it stands right now, that argument to say we are a mass market retailer, we give you the market, give us the product, is not working right now. So they need to come into the market with something more attractive. And I think this sort of comes in with what Kuda is saying, because you really need to offer them something appetizing. And one of the things that really gets the attention of a supplier is if you tell them that you have a shorter lead period between delivery and payment, and that payment will be denominated in USD. So outside of that, you're not going to get any supplies. So I think they had to make a subscription, a rights offer in USD, because they really need, one, to clear that debt, and to make sure that once they've cleared that suppliers' obligations, they'll still come back, because now there's something more appetizing and something that will push them to come back if they'd gone to other suppliers. So I think it's necessary, and I think some might come back, but right now it's a wait and see to see if it really pays out.
Right. The document mentions right-sizing the business in quotes, which includes, of course, closing underperforming stores. Is this typically a signal of a decline or some degree of smart consolidation, Kuda?
Well, I would choose the latter. Why? Because ordinarily in business, if you've got even a brilliant business idea, before you look for external financing, every person who will come to fund your business would want to know what's your skin in the game. So, I mean, OK Zimbabwe is in the business, is a retailer. And for retailers, predominantly, their main business is a business of margins. They are not into owning properties. If they do own properties, these are for strategic reasons, including some of this, right? So I would say it's a strategic move, because if you have to look at it at the end of the day, it's a sale and lease back, right? In as much as they are disposing some of those assets, they are going to use them for whatever business that they're about to do. So I would choose the latter and say it's a strategic move.
Right, and of course this brings us to Food Lovers Market, which has been a subject of much conversation, a subject of much contention. Not long ago, the acquisition of Food Lovers was celebrated by the market, and now there are indications of a couple of Food Lovers Market, of course, extensions that they had brought on board, which will now be closed. What do you make of that, Tafara?
I think maybe we're analyzing in hindsight, but it didn't make sense.
From the word go.
Yes, from the word go. Because what you have is you have one company that was cannibalizing itself. You have the Avondale shopping center that's operating right, opposite Bon Marché. So Food Lovers Avondale, there's Bon Marché and Avondale, same company, and is paying twice the rentals, but they're selling the same things. The same thing was happening at St. Levis Village. So I think it didn't make sense. I think that was more of a hubris thing that drove that acquisition, because I think maybe there was just that management wanting to say, we want to say we are continuously growing ever since we were established. But I think in doing so, there were some things that didn't make sense. I think it only got exacerbated by the challenges that the former retail sector started facing, because now everything just became apparent to say, wait, why do we have two shops in two locations and they are fighting against each other? So I think it really made sense for them to shut them down. The Blawayo branch is still open because there's no other competitor in that space, and it made sense. It's actually quite strategic, and I think it's doing well. But those other two, I don't think even if they've tried to salvage, it just didn't make sense.
Right. Part of the plan, of course, involves a reconfiguration of the board, bringing in new executives. May you weigh in on that?
Yes, that's a make or break thing, make or break decision right there. Because at the top, if you mess up those decisions, or who to hire, who to have on your board, who to have as a CEO or CFO, the reason why CEO Zimbabwe is in this mess is testament of because if you have the wrong people running the company, you could easily close as quickly as what can I say?
Should I weigh in on this?
Yeah. You're more than welcome to do so.
Okay, just to add a bit. Well, look, even there are endogenous factors and exogenous factors that affects companies. So looking at OK precisely, the sentiments in the market are that the factors are more inclined towards internal factors that led towards the downfall of OK Zimbabwe, right? And the restructuring that is happening in the leadership, with Willard Zreva assuming his role as the CEO, as well as the board changes, what it just typically means is it brings a different sentiments in the market. If you were to look at 2013, it had one. But currently, what's OK market cap? That's around quite an enormous value over the time at first, right? So for them even to be in a better position to explain why they're exercising in this rights offer, they need to...
Circular mentions regulatory reforms, including exchange rate volatility and licensing relief for former retailers. Do you think these changes are enough to change, of course, the framework for...
Worked on.
Are they saying this because they actually believe in these reforms, or they're saying it as a statement to appeal to investors?
I think there are some reforms. It made goods in their stores in USD cheaper than before. But I still think that there is some these stores. And what that means is their products, though they are cheaper than, say, last year, they're still somewhat in their stores. So I think USD sales will rise from the current 20% that we're seeing market-wide. But we don't see it going, reaching to levels that we're seeing in other industries where they're operating between 80 and 90%, having 90% of their sales in USD. So there's still a long way to go. And I think they should continue discussing with the monetary policy authorities to make sure that products become cheaper in USD so that it will help them.
The manifestation of OK's internal struggles.
Yes.
Right. But they are also in trouble. You look at what's taking place.
Sure.
Spa is also playing in the capital as well as beyond. I'll give a good example of Queensdale Spa. We could go on and on.
Even OK itself, it closed 4 branches.
Right. May you speak to the broader context of the retail sector of
to overlook the aspect that the macros, on an overall perspective, the retail sector in general is facing some quite headwinds. And the chief amongst them all, in my view, is just the issue to do with currency, man. Yes, as it stands right now, a lot is being said, right, by how ZiG has been relatively stable. But if you heard very well what Tafara said, the premium, that's just the main issue. If there is the convertibility aspect is not addressed, there is no even level playing field. So in as much as authorities might say that they've liberalized the exchange rate, can a company right now, with whatever amount of ZiG that they have, go into a bank and change their ZiG to USD at whatever rate, whatever that they're saying, is freely floating?
through a formal channel.
Exactly, through a formal channel. They cannot. So as long as that will continue, in my view, I can just say I foresee retail players surviving. But in terms of recovering, for me to foresee the retail sector recovering, maybe let's say in the next 6 months, I don't foresee that.
That's a no from you.
Yeah.
Tafara, your assessment of a possible recovery in the second half of 2025?
I think they'll continue to struggle in terms of margins. I think USD revenues will improve slightly, but I think not much. I think what we're seeing in the first half is what we'll see in the second half of the year. And I think the winners in the sector are those that will leverage off their internal resources. You have Pick n Pay, that's got a cash power in foreign currency that they're leveraging on, and then they're also in locations that are in strategic places. So you talked about Spark shutting down Queensdale, but they've also opened a shop in Cardinal Corner and Greenfields. So they're looking at where their stores are, and they're positioning themselves strategically in places where the market there is relatively insensitive to some of these price movements. I think Pick n Pay, but I think that's where the issue of management, like what could I say, you need that money.
Forced to take a breather. When we come back, we take a look at the operations of TSL. Be the market to be right back. Don't go anywhere.
Harare, tune into the beat.
Capitalk 100.4 FM, Harare's top radio station.
Join the conversation with Zimbabwe's top personalities.
Subscribe now for fresh and infotainment content daily.
Capital 100.4 FM, Harare's heartbeat.
Welcome back to Beat the Market, the only show in Zimbabwe that deep dives into everything equities, printing and packaging, agricultural inputs, storage and distribution and services, has reported a 43% increase in profit after tax from continuing operations to $4.3 million for the 6 months ended the 30th of April 20, as well as Tafara Matutu Morgan & Co. Head of Research. Now, gentlemen, your assessment of the performance of TSL, I'll start with you, Tafara.
To understand, I think they had sold just over 320 million kgs, which is the record at the moment, and they continue to break the record with each day that they're selling. And TSL being a key driver of that whole tobacco value chain really makes one understand why their figures are quite that good in USD. So I think that the performance of the tobacco sector is just, to me, is apt enough to explain what's going on in TSL.
Right. TSL recorded a 43% surge in the profit, with revenue up 8%. What do you make of the growth?
Yeah, I do share the similar sentiment. So I actually checked the stats as of today.
Yes.
So tobacco, for it to make even a little bit of sense, if we want to look at the peak performance of the tobacco sector from 1992 up to date, we just look at maybe 2019 and 2023 kgs of tobacco. But as of today, in this season, it has reached around 335 million kgs, right, of tobacco. So why do we look at that? If we are to look at the half-year financials of TSL, what means when they did start record-breaking performance in the tobacco sector.
Right. The company's EBITDA grew by 33%, driven by volume growth and cost optimization. From your view, Tafara, how sustainable is this earnings momentum going to be sustained beyond 2025?
I think that's that question. To answer that question, you really need to look at how much more can the tobacco sector grow, and how much more can TSL grow its market share in its respective markets. And in terms of what we're seeing in the tobacco sector, I think they have made some structural changes that have somewhat benefited the farmer, the tobacco farmer, especially around side marketing and some issues where farmers will be forced to sell their tobacco at half price to some dealer, and then they'll sell it back at a good price and all those things. So they've taken away those distortions. And I think that will give more confidence to tobacco farmers to say, look, I think the system is working for us. Let's produce more and get more from it. So I think from that perspective, there is a potential to sustain that growth. And then when you look at market for their tobacco packaging needs, and obviously, in terms of logistics, more and more players are coming in that space. We've seen all these things then threaten their market share in their various sectors. So it's a bit mixed, but I think if there's continued growth in the
Assessment of that position being sustained going forward.
Well, yeah, it's just the ability of the group to generate, cash. I was looking at with servicing whatever obligations that they have, paying dividends, whatever, the group still has adequate buffer cash to fund its growth and some of its strategic initiatives.
Structural changes, key movements there.
So I think one of the motivations for the disposals was actually to fund the acquisition of Nampak Zimbabwe. And that's being also, I think they're just trying to make sure that they have enough resources to actually move themselves more into a business that supports the agriculture sector more than a business that actually engages in agricultural projects. So that's why they're disposing those businesses. Avis, I never understood why they had it in the first place. Maybe it was from a logistics perspective, but I think it makes sense to get rid of that and then focus more on moving agriculture as their motto is. So that's where I think that's what my sentiments are. And then in terms of the transaction itself, I think they'll still need more than the disposals to actually fund that acquisition.
Tafara Mututu, Morgan & Co. Head of Research, as well as Kudakwashe Taimo, Vincent Capital Investment Analyst. Gentlemen, thank you for joining us on Beat the Market.
Thank you.
Fantastic. And of course, that's a wrap on Beat the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Eben Mabunda, the money man. Let them do what they do. When we do what we do, we mean business. Thank you for watching and have a good day.